Good morning to everyone joining us in Asia, and good evening to everyone joining us in the United States and elsewhere. My name is Dini Jalal, and I am the Associate Director for Editorial at the Hinrich Foundation, a nonprofit working to advance sustainable global trade. Welcome to the Hinrich Digital Trade Series. The focus of today's webinar is how to make cross-border digital payments easier for small businesses. I'm delighted to be with you today, and it is my pleasure to welcome you and our experts who are joining us for this important discussion. Let me provide a bit of context about the webinar. The impact of digital trade is a critical area of focus for us at the Hinrich Foundation. We are passionate about exploring solutions that ensure digital trade benefits everyone. That includes the millions of small businesses who make up the bulk of our economies across the region. That's why we're working with the Asian Trade Center, led by Deborah Elms, in producing the Hinrich Digital Trade Series. I'll let Debbie explain in greater detail the issue of cross-border digital payments, but suffice it to say that many micro, small, and medium-sized businesses, or MSMEs, are still struggling with cross-border digital payments, and we're trying to help find solutions that can break this impasse. I'll try to make my introductions brief. For many of you know Deborah Elms, who is the founder and executive director of the Asian Trade Center. The Asian Trade Center works with governments and companies to prepare better trade policies for the region. Debbie has been in Singapore for many years. She was the head of the Temasek Foundation Center for Trade and Negotiations, and she was also a senior fellow at RSIS at Nanyang Technological University, or NTU. Later during the Q&A session, Sebastian Cortez Sanchez will join the conversation. Sebastian is Associate Director at the Asian Trade Center, working with stakeholders to develop regulatory frameworks that are MSME friendly. Representing small businesses is Chomnap Ho of Fairweave. He is the founder of Fairweave in Cambodia, which sells beautiful hand-woven textiles. I think Debbie is wearing one there, produced by women in rural areas. And lastly, we are delighted to have Jeremy Sturkio join us today. Jeremy is Vice President and Head of Government Engagement at Visa for the Asia Pacific region. He and his team cover 40 markets across the region. Before joining Visa, Jeremy was a director at the United States Trade Representative Office, or USTR. So let me thank again everyone for joining us. Before I turn over to Debbie, a few housekeeping notes. Please let me turn your attention to the Q&A function on the screen. Please send in your questions at any point. Try to keep them short, succinct, and try to pose only one question, please. Please note also that this session is being recorded, and the recording will be made available on our website next week. Before I turn over to Debbie to share with us the findings of the ATC report, I'll thank you again. Now, Debbie, over to you. Thank you.
Pretty good. Sorry. If you hold the space bar down, you actually unmute. So who knew? There you go. There's your Zoom tip of the day. Anyway, delighted to be here. My name is Debbie Elms, as Dini just mentioned. I head the Asian Trade Center here in Singapore, and I'm very happy to be here with several of our members from our trade associations. We have large corporates, part of the Asia Business Trade Association, and Jeremy and Visa are part of that. And we have a small business wing that we call AMTC, and Chonnab is one of our best, frankly, one of our best small businesses in our AMTC platform. And the reason that I'm mentioning both of them is that this series that we're running with the Hinrich Foundation is particularly good, I think, at bringing together our large and small businesses for providing insights into challenges that governments often fail to appreciate. And this payments paper in particular, I think, is an illustration of where how we address this. And let me just give you a little bit of a story to explain why we're interested in payments in the first place. Back in 2014, when we first started making our visits to the Regional Comprehensive Economic Partnership, or RCEP, we were trying to get the 16 governments involved in those talks to come together and to add an e-commerce chapter and to think holistically about digital trade and about how digital trade made a difference, especially for small businesses in Asia. One of our parts of our agenda, we had a sort of 4-part agenda, and the 4th part was payments. We said you have to address payments in this trade agreement or you can't get small businesses to engage in digital trade, because no one will provide goods or services if they can't get paid. So we put that in from the very beginning in 2014, and then we were successful in getting the negotiations underway for the chapter, and then we ended up thankfully concluding, and we're headed towards entry into force. But payments ended up a relatively small part of RCEP at the end, and as with many trade agreements, it got slotted in under what we often call sort of cooperation commitments, which is the governments in RCEP agreed that there should be discussions, future discussions around payments. And I think one of the challenges for getting more than just a cooperation commitment in place is that government especially fails to understand what is the challenge, what are the challenges in payments, and then what are some of the obstacles that prevent better use of especially cross-border payments, and then what kinds of things should they be doing in order to make payments better. And so this particular paper that we wrote was our attempt to illuminate why payments are problematic. And the challenge I always faced when I was dealing with negotiators in RCEP especially, is that officials would look at me, they would be very puzzled, and they would say, but I don't understand why you think payments don't work. Look, I have, and they'd pull out their wallet and they would hold up a credit card and they would say, I can buy stuff. So I don't understand what the problem is with payments. Or they potentially would, towards the end, because this negotiation went forever, they would hold up a mobile and they would say, I'm able to pay for stuff. I don't understand what the problem is. So when we started this paper, we said, well, let's see if that's true. So we started calling our AMTC companies. And as Chonab will report in just a minute, his own personal experiences trying to run a small business out of Cambodia, we discovered all sorts of challenges with payments. And let me just give you a few reasons why payments are harder, especially in the cross-border space than you might imagine. And the reason that they're so the reasons that they're difficult lead firms often to stick with what they know and what they've used in the past. And when we did the interviews, and especially when Sebastian did the interviews for this paper, most of our small businesses, regardless of which country they were in, reported using wire transfers or bank transfers for most of their cross-border transactions. So when you do that, of course, there are lots of challenges attached to that. One of them is you cannot sell to consumers. That means that your digital business remains B2B and does not switch to B2C. And as we've all seen in COVID, if you're not in the B2C space, it's particularly problematic, I would say. So because we are using wire transfers or bank transfers, customers don't go to the bank and fill out the complicated paperwork in order to do a bank or wire transfer and the huge fees attached to that. And so they simply aren't in that space. So why aren't they in that space? Well, there's a number of reasons. And again, this varies a little bit depending on which company and which country and so forth, but the broad generalization remains the same. They don't do it because cross-border transfers are simply not available. You can't set up an account that allows you to be able to do cross-border transfers in the digital space, especially for many countries. You can't set up, as an example, a US dollar denominated account, or if you do, it's very difficult, very expensive. They're not used at scale. And so many small businesses especially are a bit concerned about if they should switch to a certain kind of payment method, if it's new, if it's innovative, because if no one's using it, then could they spend too much time trying to get on the particular platform or on a particular process only to discover that there's no one using it. So scale is an issue. Customers remain skeptical about many of these new alternative forms of payment. And so for companies, small companies, they say, look, our customers, they know wire transfers, they know bank transfers. And so why would I switch? I can understand why I would like to switch, but at the end of the day, frankly, I need to be paid. And I particularly need to be paid in COVID. And so I am not going to try something risky when I'm not certain that my customers are going to accept some alternative form of payment. So access and availability remains a real issue for small businesses. A second big problem, which is actually larger than we imagined when we started this, is the cost of these transactions. The costs are not just high in terms of fees, including with wire transfers, where the fees can be, $45 to $75 US per transaction. That's a lot of money if you're a small business. So the fees are very high, but they also end up having to pay a lot in exchange rates because, we're not talking domestic payments in this paper. Let me just be clear. We're talking about international payments. So you have exchange rate transactions that take place, and many of our small businesses have gotten themselves very caught out by foreign exchange transaction fees, which end up having to be absorbed by the firm. So many of these payments challenges are ultimately the cost borne by the company itself, and that can add up. I mean, they're already small, they're already cash challenged, and then you add on to that fees, exchange rate issues, et cetera. Big problem for small businesses. And the last challenge we've identified for small businesses has to do with time. And I think officials especially underestimate the power of time. If you're a small business, you have to do everything and you have to do it all the time, and it's pretty much just you doing it. So if you have to spend time at the bank with forms and forms and forms that have to be hand signed, that have to be, here in Singapore, I'm sure we've all had the lovely experience of having to justify your signature. Me in particular, every time I go to my bank, my signature is rejected. I have to sit there literally for hours to sign and re-sign my signature until they finally agree it's my signature. So this is time. This is time that I could be doing something else. It's time that any small business owner could be doing something else. It's deeply problematic, though, that loss of time. Setting up accounts is very difficult. If you can get them at all, you have to be formally registered as a business usually in order to get a bank account. The time attached to that is huge. And then the processing time for many of these payments systems is also quite long. And every day or every hour even that you wait to get paid as a small business is a catastrophe, because you're already, especially in COVID, you're already dealing with firms, business to business. Many of your companies that you're selling to have extremely long time horizons for payments, 180 days or more before you actually settle an account. And then if you add on to that any delays in banking, that's just an additional cost borne by the small firm. So time really matters. So then having identified some of the challenges, then you say, well, what are some of the solutions? And I'm delighted to see that many of you who are on this call are in the payment space yourself, or you're in especially fintech companies trying to solve the payments challenges. That's fantastic. And again, we're really interested in the kinds of questions that you guys raise in the Q&A function on the webinar. So please put those questions in. But those new solutions are challenging often for small businesses, especially in the cross-border space, because they're, again, to go back to my original point, they're uncertain about whether or not those are the right solutions for them, whether their customers will accept them, whether it brings them new business. That sort of level of uncertainty continues to pervade many of the new solutions that are out there, things like e-wallets and other kinds of transactions and fintech solutions and so forth. So why do we have this? And I think Jeremy will probably talk a little bit more about this, so I'm not going to go into it in detail. But one of the challenges, of course, is coordination is always a problem. Payments, especially, I think, in the government policymaking circles, is a challenge because it's managed by usually the central banks and finance ministries. They deal financial services writ large, of which payments fits into financial services. And then they don't always see how the payment space connects to the trade space, especially the cross-border trade space. The trade people, I would argue, don't understand payments at all, clearly. And so they don't see that this is an issue that needs to be resolved beyond saying, let's cooperate on this. And so even within a government, there's the coordination challenges between ministries, and payments falls in the middle between often powerful ministries, finance and trade. And that makes it a difficult one to crack. There are other challenges. Again, I'm sure that Jeremy will talk about some of these issues. Some of them are regulatory in nature around knowing your customer and money laundering concerns and so forth. And then we have some new problems in Asia, which I'll just flag briefly, which has to do with data and the movement of data across borders and the hosting of data, especially because it's a financial service. There are special requirements in many governments now to treat financial services data differently or more carefully than non-financial services data. And that can really foul up cross-border payments, especially for smaller firms. And then let me just conclude my opening remarks, at least, which is saying, what are some of the solutions? Well, it will not be a surprise to those of you who know the Asian Trade Center. We're big believers in the power of trade agreements in particular to help lock in certain kinds of consistency in policy recommendations. So to the extent that we can have payments solutions, or at least payments dialogues, and then potentially consistent payment regulations or payment terms across a larger and larger group of countries, we think that that is one way to help bring about better consistency in this space. And the second one, which I'll just flag now, and again, I'm more than happy to have more in-depth discussions of this in the Q&A. The second one that we would suggest is treating payments, making certain that you treat payments as a critical financial services under the services commitments, where you do, as an example, many governments have already promised that they will treat foreign service suppliers the same as domestic service suppliers. And that should apply equally to financial service payments providers of all different kinds. Right now, because financial services are viewed differently, regulated differently, managed differently from other kinds of services, because financial services are a backbone service like telecommunications, they tend to have more restrictions about what they can and cannot do. And that ultimately, I would argue, creates a real problem for digital trade. You can't get companies to go online and engage in cross-border trade until and unless you address this payments challenge. And so, just to conclude, what we wanted to do in this paper was flag and highlight, well, what are the challenges that small businesses face? Why is this an issue? And then what is the sort of unpacking that? Why is it so difficult to engage in cross-border payments? And then what, if anything, do we think we can do about it? Although the paper was less about the solution and a bit more about illuminating the problem and then the location of that problem. And then we'll have to talk to governments more over time here to make sure that we resolve some of those challenges and ultimately create a payment system that facilitates cross-border digital trade, which is the point, I think, of much of the future of the economy. And if we can't get small businesses to get paid for their goods and services in a manner that is fast, efficient, relatively low cost, we lose the opportunity to do trade for the future. So let me stop there. Thanks so much.
Thank you so much, Debbie, for outlining the challenges. Chomnap, you run a small business. You face many of these challenges. Tell us your story. Thank you.
Good morning, everyone, and hello to everyone. Let me introduce myself and my company. I'm Chomnap. I am the founder of Fair Beef, and Fair Beef is it's called handwoven textile. We working with women, especially from the countryside, and we help them to have a better place to sell their product and earn a fair income for them. So we producing like silk scarf, cotton scarf, and mostly some home textile product like blankets, home decoration pillow, for example. And recently we have produced a lot of like face masks during the COVID-19. So as a small business here, I'm coming here to share my challenges and my experience within e-payment or digital payment. First, I would like to say that for the local transaction, it is pretty advanced for the bank in Cambodia right now. So everything is faster and convenient for the local transaction. We don't have any challenge much at all for our local trade at the moment. It's just like using the bank, everything is fast. In a second, you will receive the money. And the point is that you have to set up like 2 or 3 famous bank account, then the customer will be happy to use those local transactions. And the big challenge that we are facing is about cross-border payment. One is to receive the payment from customers, and the other one is like to pay for the suppliers for some tool and material that we buy from overseas. So currently for receiving the payment from overseas, we have a customer around the world. Like we have our business partner in Singapore. We have a business partner in Australia, United States, and some country in Europe that we are dealing with right now. And yeah, the challenge is like different from area to area. Like from the challenge between like customer in Asia and United States and Australia, they are different. Like in the United States, they have their own unique. We have their unique issues and other as well different, and also the payment mode or payment it's come different. Like from bank to bank, some they use like a money pickup transfer like MoneyGram and other like Western Union to pay for them. And for sure that this payment, we have really a long discussion and negotiation, and some we fail with the new customers. Some new customer, they come to us and then they don't understand how it works for the payment in Cambodia. So they are not really understand much how it works, and also they don't want to pay extra money for the bank transfer. Like there's a fee for them, so they just want to pay for a certain money for the goods that they pay, and they don't pay other fee on top of that. This is the reason sometimes we fail and we lose the customer, and they don't want to pay, and then there's no way that we can that I can cover the loss. Then we had lost some new customer when they don't understand what is an issue, and they should that they should understand. Somehow we try to explain, and we have in our business term that they have to cover the international bank transfer fee. And then there is another fee coming in Cambodia. Like the customer already pay from their side, and to our bank, the local bank has charged us some amount of money. I think with a minimum charge of $10 for each transaction. So this is like really a challenge that we have right now. And as Deborah said, that we could not like extend our market, extend our product to end consumers, because like end consumer it really like, and also we can't like talk to every end consumer how it works and try to explain them. So
yeah,
currently we just do like B2B, and our existing buyer or our existing customer, they pretty understand from time to time, but only the new customer that very challenging. We have to talk to them, and sometimes they don't understand them. We lose the deal. So
thank you.
yeah, so this is like the challenge that we have right now. Yeah.
Understand. So your business is not meeting its full potential. Jeremy, let me turn over to you. How is it for Visa to navigate these challenges?
Well, thank you, and thank you to Chobnam. Thank you for your testimony. I think it's just so important to have the perspective of end users, of entrepreneurs and business owners, to put into the proper context the policy conversation that we're having. And Deborah, thank you for your leadership on the paper. Wonderful. Lots of things for us to talk about there. And I think the way that you framed the overall discussion today is extremely illuminating of some of these challenges. So I can speak a bit. I'll be happy to talk about Visa's experience, but I do think that the way we've organized the discussion is crucial, and we should have more discussions that take this approach of talking to the actual customers, the business owners, and working from their pain points, backwards, because that's how we really know if we're making a difference, right? Are things getting better and easier for business owners like Chobnab? So I'll just stop there. I mean, and so that's the main point. And how it relates to Visa, I'll just give you the big picture, right? I mean, Visa for more than 6 decades has been about helping people find better and easier ways to pay or be paid. And that sounds very simple and it's catchy, and that's why we use it as a slogan and everyone remembers it. But if you think about it, there's really a crucial concept there, which is it doesn't work unless you have both sides functioning well. So from a consumer and customer side, they have to have confidence that when they go to make a payment, that it will be accepted, it will be valid, it will be for the right amount, it will happen quickly. And similarly, on the accepting side for the merchant has to have that confidence that they will receive payment for the goods and services that they're selling. It will be the amount that they think it should be. It will be a secure transaction. They will have means of identifying fraud and redressing that if that should occur. And I'll come back to that in a bit later on in our discussion, because it becomes even more critical in the digital age now, where many of the customers are not standing physically in the shop of the merchant, but perhaps they're on the internet, right? And they're at a distance. And obviously that's critical when we think about a cross-border context. That's by and large the whole scope of transactions that we're discussing. So the be paid piece for the merchant, critical topic. And also the fact that so going back to something that Deborah said about the way that trade rules are written, and I'll try to not get too wonky on trade policy, but the key concept here is, if you think about the way that the rules for the pre-digital economy are written, and that's most of the rules that we still have today, they weren't written for a digital age. They were written for a time where customers showed up in a shop. They were largely written for large entities, right? So the rules, started at the beginning, and they addressed how big companies work with other big companies, and they were primarily domestic focused. Policy began because most activity occurred within domestic borders. Now we have 2 phenomena. One, more cross-border trade, and cross-border adds complexity, just to be very straightforward about it. But the other thing that's happening that makes this even more challenging is the digital tools are enabling the growth of businesses at a smaller sized businesses can grow more quickly across borders. That's the amazing economic potential that digital tools enable. But the rules never really contemplated how things should be done from the perspective of a business owner like Chobnab, right? They're all set up, and they presume that everybody who's engaged in these kinds of cross-border activities obviously must be a big player. They must have scale. They must, what's the problem with lots of rules around knowing your customer or preventing, anti-money laundering regulations? These are important things for the functioning of a financial system, but the amount of diligence and work required to fulfill regulation is often something that is very difficult for a small enterprise, right? It takes a large organization to have scale. So I think that's just the cusp of I think the conversation hopefully that we'll have today. And there's plenty more that I could talk about. I can talk about things Visa is doing to address these pain points. But let me pause and just see where you want to take the conversation, Dean. Thank you.
Okay, thank you, Jeremy. I want to encourage everyone to send in their questions, please, through the Q&A function. Let me ask the first question, actually, and it'll be to Deborah and to Jeremy. I'm curious about you saying that the government doesn't always understand. Both of you work with governments across the region. Are they trying to understand? Are there initiatives underway that help them, bridge the gap with that's existing now between them and small businesses?
I mean, I think there's a lot of effort underway because people do recognize that if we don't help small businesses, then we're not helping the lion's share of our economy. You know, even in Singapore, small businesses are something like 97% of all enterprises. They're most of the jobs. I mean, there's a lot of activity that takes place in small businesses. If we don't support them, and if we don't support them in the COVID and COVID recovery, we have a real challenge on our hands. And so, yes, governments are trying to do so, but there are many issues attached to connecting to small businesses. The first is that there's a lot of them. So if you're a government and you say, I need to go talk to small businesses, that sounds like a great plan. I'm going to do that. Who do I call? Like, how do I find representative small businesses? How do I get a hold of someone? How do I convince them to talk to me? So that just because the scale is so big, the number of small businesses so significant, how do I even know who to call? So we end up doing a lot of this actually on behalf of governments because we do have this roster of businesses across the region in different sectors. That's fantastic. But even for us, we've discovered that another problem is you have to know what you're asking for. So if you were a government official and you call a small businesses and you say, hey, tell me what your challenges are in payments. First of all, most small businesses in Asia would never complain to their government or rarely complain to their government. And if they do, they're very cautious because the last thing you want is the government to come after you for problems around God only knows what, your registration, your payments, whatever. So many small businesses, when confronted with government, everything is awesome. Thank you very much. But even if they say, actually think, and you get they say, okay, I'm a rare small business. I'm going to be very honest about it. I'll tell you what my issues are. When they're asked, do you have problems with payments? Most small businesses actually say, no, I don't have problems with payments. And then you say, well, that's having done this interview stuff. Why is that an issue? It's because you can't ask that I have solved my problems with payments. Yes, I have a lot of problems with payments, but my solution is wire transfers, bank transfers, pay the fees, try to build, as Chonab has done, try to build into a contract who pays those fees. So like after you've discovered a problem, then you try to sort that out. So if you're asked, do you have a problem with payments? Many businesses will just say, no, I don't have a problem with payments. So then you have to go much further than that. You have to say, well, explain to me how you process a payment. Explain to me how you get a new customer. Explain to me how you buy from your suppliers. Explain to me how your customers pay you. And then you start to uncover some real challenges in the policy space, but it requires a lot of work by government officials to make that connection. And then they have to be able, which is a kind of rare skill, they have to be able to translate that story they're being told from the business into policy language. Because so I can listen to a story and I can say, wow, okay, so wire transfers are expensive. Okay, that's fine. I mean, I'm sad. I don't really want you to have to pay high wire transfers, but what am I supposed to do with that? Like I sit in the trade ministry and I'm supposed to do what with wire transfer? I don't even know. So that person has to say, okay, why are wire transfers so expensive? And is there some policy or regulatory challenge attached to that cost that we might control? And if so, what is it? Who's in charge of that? And then how do we sort that out? And it's a pretty rare government that actually engages in this. And one that does, and I think I should give a shout out to this one, just this week, the Monetary Authority of Singapore released a new interesting report that is trying to get in this space, that is trying to say, how can we do a better job of supporting businesses with innovative solutions? Payments is part of it, but innovative solutions that solve pain problems, pain points. And I think, but that's rare. And so, again, hats off to the Monetary Authority of Singapore and the Singapore government in general in trying to think hard about this. And I think it started because they were trying, among other things, because they were trying to sort domestic challenges, which is how do we get Singaporeans to stop using cash? Well, one way we do that is we have to move everybody online. They need to all be digital. And then once you start to do that, then you say, well, actually, there's a number of reasons why everybody still uses cash, especially hawker centers. And you start to develop programs to move people in the digital space. And then the next solution to that is, well, how do we sell cross-border? And so there's a sort of natural evolution, but it requires some pretty crafty thinking by governments and some very careful questioning. And then some really deep assessments about what are we going to do about that? And how do we make, as Jeremy pointed out, rules that we have that are not built for today's environment fit for purpose. And so that whole process just takes a bit of time, and it's hard to get it right.
We have a question from the audience.
All right, Deborah, can I just make one comment on that quickly, just to build on Deborah's point? I totally agree, and I was going to say Deborah beat me to the punch in calling out Singapore's, you know, sort of sophistication and forward-looking approach to these issues, and it's well noted, and it's much needed, because, you know, to the earlier point I was making about, you know, the old rules of the economy, they don't fit the current realities that our business owners and our you know, that consumers are facing. And so, you know, I think in the old world of trade and financial policy, you always thought of payments as a part of a financial services sector. It was just more or less self-contained. And now when you think about the way things work on, you know, through e-commerce, mobile, anything that's digitally enabled, you know, payments are a crucial connection point, and they touch everything. So it doesn't matter what sector you're in. If you're performing e-commerce, you could be, you know, buying goods, selling services. It doesn't make a difference. Payments is crucial. So that's one aspect of this, and that is causing, you know, that's what's driving the need for greater policymaker attention on this issue, which is starting, and that's a positive. But I would just offer one word of caution in that respect, because it's perhaps tempting to point the finger at government and say the whole problem here is too many rules, too many regulations. If the regulators and policymakers would just get together and think hard and design the right solutions, everything would magically work. And the reality is that's not true. Okay, we want it to be true, but the world is a complex place. Lots of challenges, you know, no single challenge is unique, is the same. It varies from place to place. So there's a lot of work and complexity that goes into it. And what we've found are the solutions that work and that are durable require public and private partnership. There needs to be an interface and dialogue between business and government, right? And the crucial thing here is recognizing the role of innovation. And Deborah mentioned earlier, you know, in the payment space, you're seeing this, there's a new term in the industry called fintech, right? The combination of financial services and technology. You're seeing a lot of innovation in the space related to these very same pain points that Shomnab has identified for himself, and also for customers, you know, retail consumers who face similar challenges about wanting a cross-border payment to be as seamless and secure as a domestic payment. And so new businesses, fintech businesses, are coming into this space and thinking, okay, we're going to focus on this medium to, you know, small to medium size segment of the industry that, you know, just isn't mature yet. And that's where they're going to build their businesses, and that's what they're doing. And it's really it's a positive, right? It's bringing new solutions to market. It's addressing those pain points. So Visa works with all of these players. So when I say this, don't think I'm picking winners here. They're all successful. They all have different things, but companies that you've probably heard of, like Square and Stripe and PayPal, you know, they are in that space on the seller side, helping to address some of these solutions. Now, they're not in every market though, and that's one of the challenges. So, for example, in Cambodia, Visa is working with an organization called NAM24, and we're helping that organization run its business, where it seeks out small business owners and helps address their needs, helps think about how to provide them with technical resources, including payment solutions, so they can more easily integrate into the e-commerce ecosystem. And that is happening in many, many different places. It hasn't happened everywhere. When it does, the benefits to individuals, businesses, and economies will be significant. And that's the project I think that we're all embarking upon. But I just want to hesitate and say, you know, we shouldn't expect government to do everything, just the same as markets aren't perfect. And there is a role for smart regulation in this conversation, as we seek to continually find better solutions for people like Shomnab and his peers. Thank you.
Thank you. So there are two questions related to digital currencies. One's asking if you are tracking the advent of pilot digital currency projects and how they could affect cross-border payments. Are digital currencies a positive advantage for this space? Do they introduce too many challenges? What are your thoughts?
So I'm happy to start, and then I'd invite other ideas. The short answer is yes, right? Similar, just building on this point I just made about fintech, digital currency. So the important thing to start with here is there are a couple of different technologies in the digital currencies, space, or crypto coin is another one that I think has been discussed. They're similar but slightly different, and the use cases are important distinctions to make. So some are these distributed ledger technology, things like Bitcoin and Ethereum that have no relationship. They're not, tied to any sovereign currency issued by a government or a central bank. Then there's a hybrid version called a stable coin, which is kind of a combination of the two. And then there's the, straightforward digital central bank digital currency, the equivalent of physical currency just in a digital form. And governments across Asia Pacific and around the world are doing serious research, and in many cases starting pilot projects to test, the viability of digital currency. The Visa perspective on this, and many of our leaders have talked about it. I know it came up just yesterday. Our CEO actually articulated Visa's approach to this far better than I will. So I would refer you to his comments as well. But essentially, we don't exactly know which solution will rise to sort of, be the best fit for any given market. And that's why we're staying engaged in the discussions wherever possible, working with both the innovators on the private sector side and then speaking directly to governments that are designing these technologies. The short version, as our CEO said yesterday, is, fundamentally, these technologies do hold promise, because the problems that exist in the world in terms of, billions of people who are still not having access to bank accounts and formal financial services, those are largely, they've developed in part as a legacy of the physical economy and having to have access to physical cash currency. And so if digital technology enables us to more readily address the challenges associated with the last mile, as it's called in the development vocabulary, then you can see real potential for digital currency to bring more buyers and sellers into the economy and for it to be more frictionless. That is the aspiration, to be clear. But I will caveat, there is a whole lot of work on the back end from a technological standpoint that needs to be done to ensure that all the pain points that we're already experiencing today with the current combination of different payment options are resolved in a way that everyone has confidence. And that's the challenge, that traditionally those issues have been addressed by private sector entities and innovation coming from the market. And if you're dealing with a sovereign digital currency, that's inherently and essentially, needs to be coming from a government. And so governments have yet to demonstrate a track record of being able to solve end to end the entire value chain of the payment system. And I don't think they want to be in that space. That's why you're seeing some experimentation and some discussions around how would this be done. In most cases, it will probably be some combination of the private and public sectors, but it will vary from market to market.
Thank you, Jeremy. So there's a question about national e-payment gateways and whether they provide a solution. Chomnab, the person posing the question, cites the Bakong system in Cambodia as an example of national e-payment systems. So is that a possible solution, at least in individual countries? Maybe this question also applies to you, Debbie.
So
Sebastian. Please go ahead, Chomna.
Okay. So I think for any solution for e-payment, it would be better for our small business here in Cambodia. Even though we don't know much about disadvantage and advantage, but it's still, I think there should be an opportunity for us like to create those solutions, and then we can adopt and change from time to time. I mean, we can like see the advantage, and then we can like work with the people or the government here. They can like adopt the point that we facing. So I would happy to see any e-payment coming through, and then that would be a starting point to grow the business from a small business here in Cambodia. Yep.
Deborah?
And here's my take on e-payment gateways. So I understand why governments like them. Like, it makes sense, right? You say, oh, there's this big problem, we need to solve it. We're going to create one payment platform, basically. And then we make sure that everybody gets on that. And then that solves the problem of trust and understanding, and our customers get it. And great, like that, I can see why governments think this is an awesome idea. The challenge is the cross-border nature of e-payment platforms or e-payment gateways. Part of it is, so let's imagine that Chunab says, I'm in Cambodia and I'm going to use the Bakong system for payments. I'm starting out, I'm going to start this as my payment system. That sounds great. He starts pricing his goods and he starts thinking about how to use this Bakong system. I, sitting in Singapore, say I'm going to order from him. I'm not part of this system. I have no way of interoperable at the moment, my system with his system, my bank with his system in Cambodia. It means that he can't actually potentially, again, it depends on how we run these, get payments outside of his system, because it's built, he has built his company around the national payment system, which does not always work well or has fees attached to or whatever, doesn't operate at all across the border. So that's a bit of a challenge. And I think that then traps your small businesses potentially inside of the national payment system. It says, I work domestically, and then I will build my business, because firms respond to incentives. I will build my business for the domestic economy. That would not work for Chonap, because he makes beautiful things, and there's only so many people in Cambodia who want to buy them. Where his customers are is outside of Cambodia. And actually, while I'm thinking about that, let me just say, those of you in Singapore, his products are sold at the M Gallery here in Singapore. So if you are interested, go to the M Gallery, which is gorgeous anyways. Emiko, who runs the M Gallery, is another one of our businesses. So go there, look at his products. It's awesome. But if you want to buy, then we need to have these payments that are interoperable. And there are some real security, as the banks will tell you, and financial services sectors will tell you, there are some real challenges with having basically, if you think of it as a funnel, all of the payments come into one place where they then connect to the rest of the world and go out. That is a very vulnerable spot where all the payment system connects to all the other systems. So even if you manage the interoperability of that connection point, it becomes very vulnerable to hacking. Like if I could solve that, if I could hack that, then I have access to the entire national payment system. That is deeply problematic for a lot of firms, I would think, because you're at risk. Now you're not using the most safe and secure solutions that you might have, because you have to be on the national payment system. I think that is potentially problematic. It doesn't mean it can't be used, but it just needs that there needs to be some humility, I would say, at least, around national payment gateways. Again, I understand why they make sense as a government, like why wouldn't we do this? But when you start thinking about it in a cross-border context, it becomes more problematic. And then if you say, what we really want is not to have our small firms stay small, we want our firms to get big, and that requires them to be able to connect to others. And so that is why, although it makes sense to have these e-payments, national gateways, yeah, I think it's problematic in the longer run.
If I could just make one point on that, just to kind of share a bit on you touched on cybersecurity, right? And the term you were describing, I think in the industry, they call it a single point of failure, when you have the possibility of one target that could, if that's disrupted, it could affect the whole ecosystem. And one of the things that's important to understand in the cybersecurity landscape, it comes back to the point about cross-border. A lot of the more sophisticated cyber criminals are operating on a cross-border basis, right? They're choosing their targets. They're sitting in one country and they're scanning the world for, weaker systems to attack. And so if you only have visibility and you only think of your cybersecurity perimeter as limited to your physical borders of your country, you're going to be vulnerable in a big way. And that's one of the things that, that Visa, really takes seriously in our sort of global, we have the capabilities because we're a global network to monitor the system and see these things and really provide defenses and capabilities to all of our clients. And we work with all governments around the world. We have the benefit of scale. And that's something that we want to leverage to the benefit of our partners and our clients who don't have that same scale, right? But I will just make one other comment on what e-payment gateways. It's related to something that's important in terms of the policy discussion around different payment solutions, because it comes back to wire transfer. So there's a difference between an account-to-account transfer and a card-based transfer. Essentially, what payment cards, and that term is kind of going to be past, obsolete in 5 years. We're not going to use plastic cards as much. It's going to be on your phone, and the term is credential. But the point is that the networks that use credentials, they are taking the account number and they're giving you a different number. So your bank account information is different from your credit or debit card information. And that's crucial because if your bank or debit card is compromised, they can't get all the money out of your account. But if you're doing an account-to-account transfer and they get your account number, there's a lot less security. There's a lot more vulnerability there. And that's a crucial aspect when you think about cross-border. And that's fundamental to the value proposition of what a card payment offers. Having said that, the appeal of account-to-account transfers is that they in some cases are less expensive because they offer less functionality, right? It's a one-way send and it's irrevocable. You can't pull it back, right? And that is appealing in terms of efficiency. But if you're trying to get a balance between efficiency and security and some of the other protections that I just described, that's where the conversation begins. So, that's another thing to keep in mind when you think about the different trade-offs. And the good thing that comes back to what I said earlier about fintech and innovation is in the innovation space, you've got new people coming in who are thinking through that value proposition at all different price points for all different use cases. And in some cases, their businesses are built on the idea that, in this use case, an account-to-account transfer is okay. And in others, they may be saying, we really need the security that comes with a card-based solution. In fact, in the United Kingdom, there's a real increasing use of what's called open banking, and it's much more account-to-account transfers in the domestic market. But consumers are realizing that when they make these payments, they assume that they have all the same protections that they would if they were using their debit card, and that's actually not true. And so increasingly, there's a conversation around how you pay that matters. And so these are some of the details, I think, that can be overwhelming for individual consumers, and at times, can be stressful for business owners such as Chobnab, who really want to spend their time focused on perfecting their product and listening to their customers, not trying to figure out how payments work. So I think those are just some of the points to mention. The last one I'd say is in the space of getting national systems to talk to each other, Singapore and other ASEAN countries are in the forefront. There are conversations around developing connectivity across ASEAN, but it's primarily with a focus on account-to-account transfers. So one of the challenges the policymakers will have to address is how do we go and deal with some of these security issues? It's one thing to build an efficient system, but if they haven't gotten to those core challenges centered around trust, it may not be as promising as they hope. So that's something that we're actively engaged in discussions with and trying to help think about how do we solve for these challenges and take into account all the different variables that go into payments. Thanks.
Sebastian, let's turn over to you. Tell us some stories from your research.
Sure. Thank you. Yeah, just sort of to complement what both Deborah and Jeremy have said, I think when you're talking about payment gateways or any type of innovation, it's important to think from the user perspective, from a cross-border angle. I think one of the biggest surprises conducting research is that if you're not looking at these pain points and the very specific complexity of cross-border payments, you could imagine, I at least imagine that most businesses are already using these technologies. And to my surprise, most of them were not for cross-border payments. So it comes down to that idea is, why is that the national payment systems are so well developed, right? Multiple wallet applications, national payment gateways, and across Southeast Asia, most businesses actually manage to, make and receive payments at the domestic level quite easily. But then why is that when you go cross-border, all of a sudden it falls apart, and now you're using bank accounts? And I think it comes down to two problems. I think the first one is when you're developing national systems, you need to think about, are these interoperable with other national systems? And if not, then what are the implications for businesses who rely on cross-border payments to sort of keep afloat? And I think the example of a national payment gateways is an interesting one because some of them do have, local processing requirements that basically have a requirement that the data, the payment must be processed locally through often a sort of a state or enterprise. So that limits the number of solutions that are able to operate in that gateway. And that also prohibits cross-border payments to happen under certain circumstances. So I think that's one. And I think even when governments manage to connect the dots, right? So, currently in ASEAN, there is a few initiatives where some governments are promoting interoperability between e-wallets or national payment systems or national wallets. That's a great idea. But I think what we've seen a lot across ASEAN is that you have a great idea and it's designed for small business, doesn't mean that small businesses are going to embrace it and use it and are going to adopt it, at 100%. I think socialization and adoption are a huge challenge. And some of the current initiatives that, are promoting interoperability between national e-wallet systems have a very low usability and, have not met expectations. As you can see, a lot of small businesses don't know about them or are not using them. So I think it does put the onus on the private sector and governments to really come up with effective dissemination and learning plans so that most businesses understand why this is beneficial to them and, can take the lead to adopt those. And it becomes a little bit more complicated because then as a government official, you need to think from both the demand and the supply perspective, right? So it makes sense for the small business, but it might not make sense for their customers, right? So, again, going back to my interviews multiple times, most of these businesses like Shomna already have an app or some type of solution that they like and that makes it easier. That doesn't make it any easier for them to get their customers to use that or to move from using their Visa credit card or their wire transfers to using this new app that they don't know of that might have additional fees or might take the information. So I think that the implementation part is also very difficult, even when you've sort of developed a solution that small businesses should jump in and start using.
Thank you. We're coming to the end of the webinar, but there's so many topics that we haven't discussed. There's some. Let me just recognize the comments that's coming in through the Q&A function. There's a lot of concern about data flows. A lot of small businesses are saying, what about bank transfers require lots of details from our customers? And I think that relates to the general conversation about data flows in the digital economy. How much data are we sharing? What's related to cybersecurity? How do we balance between security and flexibility in cross-border payments? I also want to just make one more comment. From my experience, regulatory harmonization can be so difficult just between ministries. So I cannot imagine how challenging it would be from between countries, especially countries of different stages of development. So I wanted to ask a question about, how far away are we from some semblance of success in this space, but that might be very challenging to cover in a few minutes. Let me thank everyone who are joining us today in the seminar. That's you in the audience and also all our experts today. I hope the webinar has been informative. I have one more minute. As I noted earlier, the recording of the webinar will be available on our website next week. Let me also invite everyone to please visit the Hinrich Foundation website for the latest insights on sustainable global trade. Thank you. Okay, I think I'm out. Thank you. Have a good evening and a good day ahead.
Thank you
Hope to
very
see
much.
Again soon. Bye-bye.